Thank you, Stell. Thank you, Blake, and thank you, Kevin, for your patience. Looking forward to meeting you. I'm going to make you the presenter now. Appreciate you being here. Great to meet you, and welcome to F.A.C.E. So, Kevin, you'll see a drop-down menu there for you.
Yeah.
And there's
Hi,
your
Dale.
screen.
How you doing?
Hi, Kevin. Really nice to meet you. Really appreciate you coming in to talk to us today.
Oh, my pleasure. And I had a great time watching you guys for the past hour. I learned a lot. It was a lot of fun.
Yeah, I'm a big believer in communities and teams. You know, no man is an island, and a big believer in intelligence gathering, and that's one of the reasons I bring in guests like you. I'm interested to start off with your journey, and I know you've been involved in this market for a couple of decades, like myself. Well, 3 for me now, except that once you get up there, you can't remember how long.
That's
and
right.
Why don't you tell us how you got started in the business, and if you had mentors, and what's influenced you on the long and windy, broken road of trading, buddy?
For sure. So I actually grew up in a household where my father was the research director for a kind of a boutique Canadian investment bank. So I'm a Canadian. I live in Toronto now. And so I grew up with a lot of stock talk at the table and learning about that. So we used to laugh. I used to love games, and he used to say, I know what he's going to do for a living. And I kind of, my mom will never forgive me. She wanted me to be a doctor or a lawyer, and I always wanted to be a trader.
Sounds familiar.
So what I did was when I was in university, I actually got a job at night working for a discount stock brokerage division. This is in the early 90s. And before I knew it, I was the manager, and I was going to school at night. And I realized that that's not really what I wanted to do. And I'd always kind of dreamt of being a Chicago trader. So I actually came down and moved down to Chicago for a summer to work in the DMARC pit. And so that was way back when. But then I realized that that wasn't really my calling either. So I came back to Canada, and I got a job on the institutional equity derivative desk at RBC Dominion Securities. And it was RBC is kind of the Goldman Sachs of Canada. It's always generally considered the best of the big brokers. And I was lucky. That's right, the best of breed. And I was lucky to be on a desk and that was very entrepreneurial and very willing to let people kind of take risks and do different things. And not only that, I got my job because what they told me was that there was guys that were better at computers and there was guys that were better at trading, but I was the right mix of both. And you see, this was in the kind of early 90s when computerized trading was just starting. And so I got a job handling all the index accounts. We used to cover Wells Fargo, which is Barclays, which was the biggest indexer. And we used to execute all their trades. And long and short of it is that I worked there. And before long, I worked myself up to be the head derivative trader, where I wasn't handling clients anymore. I was just handling the bank's risk. And I was the head proprietary trader for that at RBC during the long-term capital debacle and during the dot-com bubble. And it was a lot of fun, and I had a great time.
Yeah, and how fortunate of you to basically had your father as a mentor, even though you went out on your own. I mean, look at what people go through nowadays, Kevin, on the internet, trying to find good resources to develop themselves as a trader. You really had an edge from the beginning, and very interesting journey. And our mothers felt the same way. Mine said when I went to the Florida run, when you were in the DMARC pit then. No, it was the 90s. I was, I started in the mid 70s. So she said, "Honey, get a real job." Okay, so
right.
Right. So you've gone through all of that. And, I noticed you have a website with some excellent content, Kevin. I'm going to encourage people that are listening to us now or watch the recording to check it out. What's your take on markets since we had the worst December since 1931? do you feel that these are trading range markets, that we're going to, the bull market is not dead, and this is setting up quite an interesting buying opportunity? And what are your main instruments that you trade? I see a stock chart up here of Titan
Oh, sorry.
Medical.
That's actually I forgot. I forgot that you guys see my screen. Sorry about that.
Yeah,
Was
it's okay.
That's it. Yeah. So in terms of my take of what's happening, for the longest time, I unfortunately I think we're in a period where the Fed and central banks mean everything, and it
Well,
kind of it bothers me to be there.
Haven't we been there since 2008?
Yeah, well, you're right that we've been there since 2008, and there was some hope that Powell was going to take us off of that. He
Right.
seemed to be, he came in and it really was, he mouthed some words about being different, about not being the Yellen and Bernanke academic, and showed all sorts of signs of wanting to tune for the real economy instead of the financial economy. And
Right.
I really thought that it was interesting to see what happened going into his October 3rd comment. And I think that October 3rd comment, when he said, we're a long way from neutral, was kind of a tipping point. And we can go through, like, I realize you can see my screen here. You can see where this was October 3rd, the S&P. And you'll see that it went straight down from then. And if you do this on a bunch of things, like it's not just let's do crude oil here quickly.
Yeah,
You'll see that
they've been kind of married at the hip.
that's right. And it was the same deal, October 3rd. In it, you'll see that I'll pull up the chart here. This day here was October 3rd, the top. You'll do the same with credit spreads, which kind of is a measure of what investors are forcing private companies to pay above treasuries to borrow. And we'll see that this is the mirror. It was October 3rd was right here. And from then it went straight up. So to me, he had kind of come in with the idea that he was going to tighten until something broke. And then it became clear that something was in the midst of breaking. But unfortunately, he was tone deaf during that whole period. He had numerous times, including the December Fed meeting, where they could have passed. Remember Stanley Druckenmiller and Kevin Warsh, encouraged them to pass. Even during the kind of the press conference afterwards, they asked him about the balance sheet, and he said it was on autopilot. And he had all sorts of ability to kind of ease up and to do what Yellen had done, and he refused to do it. And I think that he caused the big crash of the December 24th massacre, that ugly market, because he was tone deaf. And then ultimately he caved. And if we look at what happened since he caved, it's been straight up since then. And then I think Friday, with him caving, now there's some question of whether he truly has caved, but he had indicated that he was going to be flexible in terms of rates, but up until kind of Friday, he had showed no signs of being willing to change his balance sheet rundown. But on Friday, with the Wall Street Journal article, which many market participants assumed was the Fed planting that story, he showed basically he I don't know what he like a trial balloon to say, you know what, maybe we're going to go and we're going to ease up on the QT as well.
Yeah. Yeah. Okay. Do you think it's a trial balloon by the Fed, or do you think it's because of the source that it was the Wall Street Journal that they leaked that to check it out, or do you think that's just maybe hopeful, wishful thinking that they're going to stop QT?
Well, there's no doubt in the old days with Hilsenrath, Bernanke used to whisper stuff to him all the time. And that was definitely when Hilsenrath wrote, he was a reporter at the Wall Street Journal. When he wrote, we were getting that from Bernanke. The question is that happening now? I'm not sure. But I do know one thing is that the market priced in, like, remember Friday, we had a face rip and rally.
Right.
And now, unfortunately, the Fed is in a situation where if they don't come through on Wednesday's, FOMC meeting with a change in quantitative tightening policy, the market could be very disappointed.
It seems to be setting already showing some disappointment with it down pretty sharply today, and not being able to take out the high from a week or so ago. So tough call for me right here. I'm not sure what to do. There have been some outside markets that also benefited. The dollar sold off. Gold's been acting good. When we have major events like this, Kevin, like Wednesday, the Fed, I'm not sure if there's a presser followed up by the NFP on Friday, which could really contradict anything that he said based upon the numbers or confirm. And in a week like this, I really have a hard time wanting to do a lot because I feel like I'm compressed by time to achieve the outcome of a trade, because I really don't want to be there for the event. I'd rather react to the event. What do you do on weeks like this? And how do you hedge in case you just want to go through all the noise of the Fed and the NFP?
Well, I was listening to your the presentation earlier, and you said, I don't try to predict, but love to react to the market. And I thought that was just a terrific comment. And I think the one thing you need to do, if you're going to go through an NFP, your time frame has to be much, much longer. So if you're willing to sit through NFP, then that means that you're playing, instead of playing for the next 20 S&P points, you're playing for the next 100 or 200. Because the truth of the matter is that it is a coin toss and you don't know what's going to happen. So if you're trading kind of for fives or tens on the S&P, then you shouldn't have a position going in front of the NFP, and you shouldn't be. That's almost gambling as opposed to trading. You don't know the thing. You don't have an edge. And so I'm
a red or black bet, like roulette.
Yeah. And I'm 100% in your camp that why don't you wait for the market to show you what it wants to do and then just kind of climb on board. I still think it's important to know the fundamental backdrop so you understand what the market views as important, what it's keen off of, what are the issues of the day. But in terms of when you're going and you're thinking about trading on a shorter time frame, you'd be foolish to kind of try to go and just bet on a number.
Okay. So we're pretty early in the year, 2019. We're about to finish off a pretty good month for a lot of things because of the change of tone from Powell, especially when he was sitting right next to Bernanke and Janet Yellen. Do you think they had any influence on him softening his tone? What do you think?
I don't know. I'm confused about what he's trying to do to be truthful.
Okay.
He's because to me
he is.
Yeah, well, I think he had gotten through the point where he didn't need, like, the market had already stabilized. He didn't need to cave. The market was already kind of firming up, and the worst had been, like, he'd almost seemed like to me, if you were going to cave, why not cave earlier? Like, it just seemed a poor timing to me on his part. And I don't know if you can chalk it up just to the inexperience of being the Fed chairman. He's, only, 9 or 10 months into the job, or wait, a little more than 11 months into the job. It's difficult because he probably has underestimated how much every one of his comments is going to be dissected for a change in policy.
Okay. Do you trade with biases, Kevin? Certain groups or sectors that you may have a long-term conviction level that's higher than others, and I'm curious what they may be, what you're looking at in the markets going forward. I'm assuming that you mainly trade equities. Am I correct, or do you trade?
No, I trade a lot of futures. I trade all sorts of futures.
Okay.
So yeah, I have
a view on the dollar. I mean, that's our bailiwick is currency here. Yeah, you have a view on the dollar.
Well, I don't have as much a view on the dollar because I view it too much as a risk on, risk off kind of trade too often. But I do have a view
on market.
That's right. And I do have a view on Australia dollar CAD kind of cross rate. And I view
interesting.
Yeah, so I'm a big seller of AUDCAD. Like, I just think that thing's headed a lot lower. And I'll kind of sketch out my reasoning for you. China is approaching their Minsky moment. It's there's no doubt that they can no longer continue with the growth that they're having, that they're adding credit at too fast a rate. I believe that this was kind of the Trump being tough on Prime Minister Xi was kind of the catalyst to him going about and putting through the tough reforms that he needed to do. So I think we're kind of at a point where they're not immune to the business cycle, even though they're a command economy, and they're going to go through a recession or a slowdown. So having said that, what's the best way to play it? One of the things you can do is
you have a chart of it that you could show?
Yeah, sure. Well, so one of the things you can do, I'm sorry, I'm not used to the screencasting and putting up charts, but one of the things that people could do is they go out, and a lot of guys, a lot of the big China bears, you know, the Kyle Basses of the world, think that this is going to ultimately reflect in them having to revalue the renminbi much higher, meaning lower in value, higher in this rate. And if we go look back at this chart kind of over the long time frame, you know, it went up to 7 and it went down to 620 and it's back up to 7. But the interesting thing is that even as China has been kind of having poor economic numbers over the past kind of quarter, let's say, you'll see that it's been strengthening. So to me, I'm kind of like, the Chinese currency is not like reflecting fundamental values. It's not something that you can play for kind of, you can count on it to reflect a value. Maybe someday you're gonna wake up and this thing's gonna get revalued at 9. I am not disputing that at all. But that's not something that I want to be trading, because I don't want to be sitting around bleeding, hoping then for the big revalue higher. So I look at it and I think to myself, what is the economy that is most tied to China? Like out of the main ones, it's Australia. So I look at Australia, their biggest trading partner is China. Then I look at Canada, and Canada, our biggest trading partner is the United States. And I think to myself, well, if I don't have a view on the dollar and I want to find a pure way play to just kind of bet on China versus the US, kind of taking out the whole equation about the reserve currency and what the US dollar is doing, to me, shorting Australian dollar CAD makes a ton of sense. Now, we're both resource economies, so you're not going to get that kind of, they should move together. And when you look over the longer period, you'll see that actually it is very choppy and it really doesn't go anywhere. But I look over the last year and you'll see that it's a series of lower highs with a big downtrend. Although Canada is going to suffer from many of the same things that Australia is going to suffer from in terms of the Chinese being a big influence on our real estate, there's no doubt Canada is still more tied to China than, let's say, the US is. But in terms of Australia versus Canada, I think Australia is way more tied to to China. And not only that, they're already showing signs of stress in terms of their financial markets and in terms of their, real estate markets. So
do you think the injection of reserves last week by China was desperation to stabilize equities?
I don't think it was to stabilize equities. It was to stabilize their economy. I think that even though it appears big in the grand scheme of things, it's just like them applying a little gas. Yeah, a little bit of gas on a slowing. Like, they just don't want it to kind of spiral out of control. But I really don't. They
want to let the air out of the balloon slowly instead of it popping, right?
That's correct. And that's
like all central banks. Yeah,
that's right, and that's all that was. And I do not think that this was the start of a big time Chinese kind of stimulus cycle. And I'll tell you why. There's a political cycle that you need to be aware of in China. Their next big kind of event is in 2021 when it's their next plenum, and it's the 100-year anniversary, I believe, of the Chinese Communist Party. They have no desire to kind of get the economy strong for 2020. They want it go strong in 2021. And given that they want it strong in 2021, and this Felix Zulauf, that fellow from Switzerland, he's a great guy. I actually had a post of this on my blog, the Macro Tourist.
I've heard of it.
About this, and he's been talking about this for a while, and he called this a year ago. He said China is going to continue to decelerate, and they're not going to accelerate until 2020 because they're going to want everything humming for 2021. So I look at this and I think that the people, the bulls that are calling for China to stimulate aggressively now are too early. I think that it will come, but it's not going to come till 2020. for 2021 kind of stimulus. Like they're going to want it to be kicking in 2021, so that means they're going to do it in 2020. The other thing that I think is interesting is that many people look at the China trade war with the U.S. and they look at Trump and they say China's hurting so much more than the U.S. they're going to fold. And I completely agree that their economy is hurting way more than the American economy is hurting. But I think where those people get it wrong is that they're assuming that China is sensitive to the short run. And I think
they think in 100-year terms. Yeah, we think in 6-month terms.
Right. And I think you could see that President Trump was actually much more sensitive to his stock market going down than President or Prime Minister Xi was to his stock market going down. I really don't think that China is going to fold. And
Xi doesn't have to run for re-election in 2 years.
Right. And so I think he's willing to take the pain. And so when I look at this situation, I worry when the market starts pricing in too much optimism about the China trade deal and too much optimism about Bernanke being easy. So I kind of feel like it's setting up to be disappointed. And I look at this and I wonder, and you talk about the fact that Friday we got all this bullish news, but now we're acting poorly. And a market that can no longer rally on good news is a market that should be sold, right?
Right. So looking at China, they've been one of the biggest accumulators of gold for many years now. Do you think they have it right, even though they're looking at, long term? They're a creditor nation, not a debtor nation. Do you like the gold market? We've had a nice advance from the summer. Any view? Or yeah. I know some deflationists, they really tie it to the yuan. There's a pretty good correlation. It's almost a peg, gold against the yuan. And if the yuan is bottoming here, US dollar yuan is bottoming here at 670, it could lead towards maybe lower gold prices if it went above 7.
So I don't buy. So I think the Chinese price, the gold priced in yuan is actually very important, and it was something that I wrote about and brought out to everyone's attention. This level at 8,200, you can see it here that it bounced and it bounced and it bounced and it kind of formed this like there was lower highs, and then all of a sudden it broke down. And I remember at this point everyone was super bearish on the gold, and then we quickly jumped back up into the range and we were above it, and since then we've been headed straight up. I don't think that the gold is pegged in yuan. I don't believe that by any means, but I do believe that they actually monitor it priced in yuan, and I believe that this was a floor, and I believe they let this go below there just to try it, and then very quickly started accumulating gold again. And I am a big believer that over the long run, the global economy is over indebted, and there's going to be 3 different choices that we have to come out of this. Is it going to be one? People believe that we're going to be able to grow our way out of the debt. I don't believe that for a second. There's just too much of it. I just think it's people have to go look at math when they think about that. The second choice is to have kind of an Asterian style kind of 1929 depression, where all of a sudden it gets written off, and then you have a couple of bad years, all the debt gets written off, and then you can start again. This is what was trying to happen in 2008. We had the start of the private sector collapsing in on itself, and then very quickly the governments decided they didn't have the stomach for it and they couldn't handle that, so they went in and they kind of bailed it out. So which leaves us with our third option, which is that they inflate our way out. So ultimately I believe that we're going to get inflation, and I think that even we will have periods where we will kind of believe that maybe we'll be able to get out without having inflation. And I think that this last 2 years or last year of Powell trying to raise rates into it and say everything is normal and everything is fine is an example of kind of that of a cycle where we're believing that maybe we can make it without inflation. But look at how quickly he's turning tail and running. The balance sheet is down what? $500 million out of from $4.5 billion, and he's already saying like that he's going to not do it. So when you go back to gold, I think that ultimately gold is something that is everyone should have some of. It's a real asset. It's nobody's liability. It will be, in the long run, you will find that central banks, nobody can afford to have a strong currency over the long run, and gold will be a natural beneficiary of that.
Okay.
And I think and one second
ahead.
before I think that Friday was really interesting, because would you not agree that gold wasn't looking great going into Friday, and then all of a sudden out of nowhere it really got a bid, and the action was great, and I think it surprised a lot of people. I don't feel that there was a lot of gold bulls like chomping at the bit talking about how it was going to go up, and then all of a sudden the thing just started ripping. And to me, when a market goes up on just like that strongly, when no one's really talking about it, no one's really looking at it, that feels very, very like it might be the start of something more to me.
Okay, I'd like to wrap it with something that I'm still having a hard time wrapping my head around. Any view on cryptos, Bitcoin? Here, Kevin.
So I'm a terrible guy to ask on Bitcoin. I have been
Okay.
I have a story to tell you. I ultimately I was actually in on it early. There was a fellow that worked with me, and he told me a Bitcoin at $5. He's a computer science kind of guy, and he told me about it, and I said to him, that is the stupidest thing I've ever heard. Why didn't she go back? And then kind of 3 months later, he says, that thing you told me is the stupidest thing ever. It's now $50. And to my credit, I realized that if it's $50, it could be $500 or, even more. And we started mining it and arbing it and doing stuff. And so I was actually way back when it was $100, we were Bitcoin miners and doing it all. My trouble is that I never truly believed, and I was always kind of thinking that it was a bubble. I still have trouble with it, so I'm not the right guy to ask, because I think ultimately
what a great
it's headed
story,
a lot lower.
Were you the guy that traded Bitcoins for a pizza that would have been worth
I was not. That was
$1 million now or something like that?
That guy was a little ahead of me, but we were in there early. And so we actually had bought all those butterfly machines. We actually at one point had to move all the machines we had so many machines in our office, it was making it too hot. We had to move it into our garage because it was making our office too hot.
Yeah, I tell you what. Well, with the new marijuana craze, you could have used it for, what do they call that? Where it's grown inside.
A greenhouse.
Hydroponically or something like that.
Well,
Kevin, it was really a delight talking to you today. I love your demeanor. Some real good content talking about China, and actually having a Forex trade for people to monitor. Why don't you show your website and how people could follow you? You can follow Kevin on Twitter at Kevin Muir.
That's correct. You got it. And so the website is actually themacrotourist.com. You can go there. I write every now and then, and I used to write all the time. I'm a little not as kind of consistent as I used to be, but I have one this morning. You can see up on the top right, you can sign up. There's absolutely no kind of, I'm not going to sell you anything. I got nothing to kind of pump or anything like that. It was originally started as a blog for me, just to kind of get my thoughts down on paper, and it kind of took off from there, and I do it for fun. One of the things I try to do is I try to have a funny picture with everyone, and at the very least, if you don't agree with any of my market calls or don't find any kind of benefit to that, at least you'll kind of, I hope, get a laugh on the first picture.
I really appreciate it. What's your business model, Kevin? Or besides trading your own money?
So when I left RBCDS in 2000, I went off and I decided to start trading for myself, and I did that for the last 18 years. It happened to be when I had kids, so I got to spend a little more time with the family. My oldest went off to university, and I said, well, it's about time I go and manage some money. So I went and phoned up an old buddy that used to work at one of my competitors, and that's East West Investment Management, eastwestfunds.com, and we manage money for high net worth individuals, and we a variety of different services and products for them.
Well, like it or not, you're now my trading warrior brother, and I'm glad to know you, and would love to have you back, perhaps in the spring, a little bit down the road, to see how things are panning out. And want to thank you for edifying our community today, Kevin.
Well, thank you. It was a pleasure, and it's nice to meet you as well, Dale.
All right, everyone. Thank you. That's Kevin Muir. You could follow him at Kevin Muir. And Tom Lano's saying thank you. And a lot of people are saying thank you and appreciate the content you provided today, Kevin. So that's a wrap for us here. Remember, don't just count your pips, count your blessings. And I'll see everyone. I'll see everyone for Turnaround Tuesday. Enjoy the rest of your day. Adios. Thank you, Kevin.
Thanks, Dale. That was a lot of fun, bud.
All right, man.